Okay, here we are. It is December the 12th, 2022. It's now 4:01 p.m. Central Time. The bond market is now closed for the day, and we are now waiting for the big news to come out tomorrow, which is the Consumer Price Index, and then followed on Wednesday by the announcement from the Federal Reserve as to what they're going to do with the federal funds rate, and then some comments that will come out during a press briefing from Jerome Powell, who is the chairman of the Federal Reserve Board. So we have been talking about home loan interest rates subsiding into the first and second quarter of 2023. We've already seen a great reduction so far here at the end of 2022. And we've been following the charts that have been telling us why this is happening and why I am so optimistic going into 2023. So let's take a look and see what we need to get tomorrow from our Consumer Price Index report in order to see home loan interest rates continue to move down. So let's jump over here, first of all, to where we are. Well, let's take a look here at the Consumer Price Index. So this is the U.S. Bureau of Labor Statistics. You can look this information up. This is as legit as it gets. Let's roll down here a little bit. Now, unfortunately, this chart does not go back 12 months because if you pay attention to the Brent Bruce Daily, you know that we really need to see a 12-month history to understand what we need tomorrow's report to come in at. Tomorrow's report is a consumer price index that is going to show the month of November. So the CPI inflation for the month of November. Now that November report hopefully will be lower than the October report. October, November showing inflation going down. But more importantly, it needs to be lower than the report that came out for November of 2021. Because if it replaces a higher number with a lower number, then the 12-month average is lower. So what we want to see here, if we go back to the Bureau of Labor Statistics here, what we want to see is the core numbers. So right here, all items, less food and energy. If we roll all the way down, currently the year-over-year number is 6.3%. Where are we at here? Okay, 6.3%. We need that number to come down. So what was the number for November of 2021? It was 0.5. So we need the month-over-month number to come in at 0.4, 0.3, 0.2 in order for the year-over-year number, which is currently 0.6 or 6.3, to go down. Now, what are we anticipating? The markets in general are talking about it coming in at 0.3, which would be great. That would be a 2-point reduction in the month over month from the last 2 years, which would allow that 6.3% to come down to 6.1. Now, I'm going to predict a little bit better. I'm going to say that we're going to get a 0.2. And if we get a 0.2, we will then be able to see the consumer price index core reading at 6.0 instead of 6.3. And I think home loan interest rates are going to love that. Then we're going to follow it up with the federal funds rate being released with an increase of 0.5% instead of 0.75%. And that also is going to show that inflation is subsiding in the eyes of the Federal Reserve. And we are in a great position to go into a great 2023. Where are we right now? We are currently down 6 basis points on the mortgage-backed security, up 4 basis points on the 10-year Treasury. Where are we on our charts? Really bouncing in between this floor of support and ceiling of resistance. Obviously, guys, look at how things are just waiting for the reports to come out. They are on the sidelines, ready to see how these reports come out, making sure that there aren't any surprises in those reports that would make the, unfortunately, show inflation not subsiding enough or even possibly inflation increasing. I'll be very surprised if that is the case, but until you get the reports, you just don't know. And the mortgage-backed securities are showing that same sentiment by staying between a floor and a ceiling, which is a little bit of a place of safety, just hiding in between these two numbers here. The 10-year Treasury is about the same, sitting right here at this ceiling of resistance. Here's your floor down here. So staying in this place of comfort. Where are we on the mortgage-backed security? I'm sorry, on our home loan interest rates today, ahead of the big CPI report? I'm going to bet that we have a little bit of buffer in our interest rates right now, again, because it is a place of safety. We're currently showing 6.375 on the 30-year fixed, very well qualified conventional mortgage with a little tiny bit of a credit in order to get to 5.99, which was what we really want from a psychological perspective. It's costing a little bit less than a half of a point. Here are the parameters for the Brent Bruce Daily that we're looking at right now for compliance purposes. So what we need to know is that right now we are at 6.375 with no points. We're at 5.999 with a little bit less than a half of a point, which of course we're going to have the seller pay that. So realistically, we're probably still in the 5.99 range is what our client is going to lock in at with the Brent Bruce Daily Rancho Capital Home Loans, or somebody who is pricing things aggressively enough. We also expect that right now, home loan interest rates, the mortgage-backed security market, and the 10-year treasury market are basically on the sidelines waiting to see how the CPI report comes out, and then also the interest rate either increase or reduction from the Federal Reserve, which we believe will be 0.5%. When these two reports come out, they're setting us up for the future of ending 2022 and also rolling into 2023. Big reports. I will let you know when these reports come out. Tomorrow, CPI comes out at 8:30 a.m. Eastern time. You will hear from me early. Have a great day.